Hi, welcome to this video day. We're on the 12th of May. It's Thursday. In today's video, we're going to give our updated outlook for the Japanese yen. We're going to be looking at the yen against the euro, the AUD, the CAD, and the NZD. We'll go over the charts in just a moment. Now, we did look at these pairs in a video on Monday, and we said the yen had shown some strength, but we expected it to accelerate away to the upside. Now, it has done that. The yen has firmed up nicely. There is still way more strength ahead in our view. And in terms of the yen, if we look at the big fundamentals, they favour the yen in this environment at the moment, and speculators are still heavily short, which points to more yen strength. Now, in terms of the trade setups, what we're going to do is we're going to go over them right now. But just before we do so, please do keep in mind, it is my view as of right now. It can, of course, change in line with the market action and conditions. If you want to learn all our trading techniques and check out our daily technical sentiment analysis of 14 FX pairs, including our exact entry stops and targets, you can get live access to our member center on the link beneath this video. You can also follow our Facebook page and join our Facebook group of traders if you wish. Right, let's go and take a look at the trade setups. The chart of Euro JPY. Now, in terms of since I did my video on Monday, we've seen a nice fall to the downside. There's a lot more downside to come. We might even go down to monthly support. I'll show you the monthly support level in a moment. Now, in terms for anyone new to our videos, when we do our technicals, they're simple, okay? We've always got a bias from the fundamentals and sentiment before we do the technicals, so we can keep them simple. Just focus on levels that we think will be important to big institutional players in the market. Now, we have seen a nice fall, way more downside to come, but we need to look at a few charts of what's going on behind this chart, which I'm just about to do. But you can see that rally up in the euro against the yen. A lot of majors rallied strongly against the yen. Why? And why are we falling now? And why are we so bearish of the euro and other majors against the yen? Right, let's go and take a look. The first chart is to do with interest rates. This is what caused the euro to soar up on the yen, why we saw yen weakness across the board. It's where traders see interest rates of major banks in a year's time. And you can see Bank of Japan near zero. Well, if you sell the yen and buy one of these currencies, you're going to get a better yield, aren't you? So basically that's what happened. You had a huge move short of the yen. It was a massive move. Bring up this chart here. It says one-way traffic. I posted this about 3 weeks ago, just over 3 weeks ago. It's just before the yen selling abated and the yen started to make a little bit of a comeback. One-way traffic it was. Asset managers, big money on the COT net traders positions, speculators, their bearish bets hit a record. So a huge amount of shorts. We felt in recent weeks that, the low interest rate of the yen, and the yield trade, that was kind of getting into the price. And we're looking for safe haven flows to boost the yen. Now, the yen, if you look at Japan, it's got the world's biggest current account, not the world's biggest, but it's got a massive current account surplus, and the Japanese are the world's biggest savers with the biggest amount of investments overseas. When you get risk off, that money comes back to Japan, and you can see it here. S&P going down, stock markets are generally. Japanese liquidating those risky investments, taking it back to Japan. That obviously boosts the yen. They're also liquidating a huge amount of bond investments, particularly in Eurozone as well. It's huge money going back to Japan. You also get basically big institutions parking their money in the yen, traditionally as a safe haven, and using the JGB bond market, which is the world's second largest. Stocks coming down nicely. We've gone through the bearish argument in recent videos. We think stocks could go down to 3.2. maybe even, no, you might see a little bit of a bounce first, but stock's just so bearish in our view. Okay, now in terms of going back to the chart, where would you sell? My own view is you go through the low, just sell. 133.06, just below 133. It's a round number. I haven't drawn the level in across here, but that would be bearish and point to more selling. If you bounce back towards the 134 level, you can come off the level on weakness. This level here should hold. It's 134.50. We've got our stop at 134.80. So we're in at 136.70. So we've got, basically a good profit, just over 300 pips. But this is a decisive candle. Speculators have got taken on stop. There's more speculators to get taken. And obviously, we've just put forward the bullish yen arguments. Even if you came in now, you've got great risk to reward down to these levels. A lot of traders are nervous about selling a big candle. Sometimes they don't come back. So I'd have a small trade in, keep one in reserve just in case we rally. Now, I've said we could go even lower. Let me just take a look at the monthly chart of Euro JPY. You could maybe go back towards the 120 level. Okay. Now, in terms of is this level realistic, I think it is. Okay. I put some notes on my blog about why. But yeah, a lot of downside in the yen. Obviously, there's levels in between. That's a longer term target. But Euro JPY looking bearish, and so do the commodity currencies, which we're going to go and look at right now. On CAD JPY, you can see a big rally there. Bit of a retracement, another push to try and get up. And now we've got a nice red. Now, in terms of this pair, I think speculators are getting hit on stop. We know from the COT net traders positions that speculators hold one of their biggest short positions against the yen in this pair. So I personally think that this will continue to the downside. Any rallies back to first resistance are a sell, and we got our stop behind the big 100 level. If we start selling off to the downside and we take out the 98 level, which is a round number, we'd have to bring our stop behind this first level. At the minute, it's behind the second. Plenty of downside to 92, 90, may even get to chart lows. Now, the background for the commodity currencies, all of them, obviously, if you get risk off in the stock market, that hurts them. But they're being hurt anyway. The global economy is slowing. That's clear from the data. China, the world's biggest commodity consumer, was really slowing up. So, yeah, the backdrop for the commodity currencies, very bearish. And I really, really like this pair for more downside. Next one, NZD JPY. This one's actually had a good fall already. If we go through the low, at the minute our stop is behind 81, we'll bring it in behind the first level resistance. At the moment it's behind second, just in case we get a rally. So it's the same with all of them. You could sell a rally. My own view is have a small trade in, keep another in reserve, just in case you don't rally and just keep going to the downside. Now 76 on the daily chart is our target, but I think we could run lower than that. I think we could run back to the 70 level. Now, in terms of this big rally here, okay, that was just with stimulus after COVID, wasn't it? Stimulus is now going, so I think we could retrace a good portion of the rally. This will be longer term. We've got to get to our first target first, but yeah, we could go there longer term down to the 70 level. We'll see. What's the next one? It's AUD JPY. Right, in terms of AUD JPY, it's rolled over since we took our trade at 92.80. We're now 87.64. So it is a really good move, and that is a big red. Okay, how would you play this one? I think if you go back up through 88, just sell back through the round number. Just look for any weakness if we do try and get back towards the 90 level. Okay, again, I'd say stick a small trade in through the low, then at least you're in. Okay, stop needs to be behind 90 at the moment, but if we gain traction, took out the 87 level, okay, I pop the stop back behind these three candles, something like 88.60. Okay, so yeah, because if we get another red candle, I think the continuate or odds of continuation would be high. Looking for 82, then 80. If risk off really does gather pace, then this one would probably go towards the 76 level, which I think would be about fair value for it from our calculations. So yeah, there's some pairs to look at. Now, I didn't cover USD JPY. Why? I think, yeah, if you're looking for a move to risk off, the dollar and the yen are both safe havens. So there's no point in trading USD JPY. You want to trade both the USD and the JPY against risk currencies. And the commodity currencies are certainly risk currencies, and regular viewers will know how bearish I am of the euro. So yeah, so market's nice and volatile. We'll see what happens. So yeah, that is the video for today. Thank you for watching it.